In 2025, Bitcoin did the same movements as the S&P 500 about 60% of the time. Crypto and the stock market have a correlation because there's many factors that influence both markets. However, there are some exceptions, so let's get into it. I'm Brett at CryptoGX, and in this video, I'm going to explain why these markets sync up and why crypto really goes solo in certain situations. I'll use very simple and specific examples, data from this year, and I'll try to explain how you can use this to your favor, whether you're trading stocks or cryptocurrency. So why do these markets sync up so often? First of all, a lot of the same things affect both markets. In many cases, crypto moves with the stock market because both respond to the same larger signals. Now, typically, if the stock market is going up, crypto will also follow. And then if it slides down, the crypto market reacts a pretty similar way. The economy plays a huge part as well. When things are going strong, people have extra money to invest. That lifts the price for stocks and crypto. But if the economy slows down, people really pull back, and then both markets can drop. Decisions by central banks really affect them too. When interest rates go up, borrowing money costs more. People might invest less, so prices in both markets can decline. It's really a ripple effect that hits both stocks and crypto. Take a simple example. When the US Federal Reserve signs lower interest rates or economic data shows strength, people really become optimistic, and then their money kind of flows that direction as well. Because of this, people feel more willing to invest rather than hold on to their cash. And the response is similar for both markets. Now, that optimism in the general market doesn't just lift up the stock market, it lifts up Bitcoin and Ethereum as well. The pattern is pretty clear. More confidence leads to more risk taking, and crypto, for many investors, sits on the high end of the risk scale. So now take that and reverse it. When recession fears spread or inflation numbers come in hot, people really pull back. They sell their tech stocks, and often really they sell their crypto too. In 2022, the stock market saw one of its biggest drops since the 2008 crash. The Dow went down 0.22%, S&P 500 went down 0.25%, and the Nasdaq lost 0.11%. These were pretty sharp losses when it comes to the stock market, and they were driven by aggressive interest rate hikes to curb inflation. They were also curbing recession fears, the Russia-Ukraine war, and rising concerns over COVID cases in China at that time. The crypto market cap fell from $3 trillion to $800 billion, which is a massive, massive downturn. Investors were cutting risk. The reaction was broad and fast. There are tons of examples like this over the past two. In December of 2018, both Bitcoin and the Nasdaq prices dropped to record lows. Bitcoin reached just under $4,000, while the Nasdaq was at about $6,200. In June of 2019, Bitcoin and the Nasdaq went through a very sudden and sharp price peak. And then in February of 2020, both Bitcoin and the Nasdaq reached record highs for the quarter before rapidly plunging. So these big global events really tie these two together, and most assets in general. If there's tension between countries or some major news breaks, investors get cautious, and that's just a norm. Investors being cautious can lead to price drops in both markets. Both offer the possibility of high returns, but they also come with more volatility. And this volatility is specific to when there are big market events. So when market sentiment turns positive, the money flows into both and prices rise together. How investors feel really matters. If they're confident about what's ahead, they buy more stocks and crypto, so both markets rise. But if they're nervous, they sell, and both can fall. It's kind of like their mood swings are pushing everything in the same direction. Now, they're not exactly the same. Stocks depend a lot on how companies are doing. If a company performs well, its stock price usually climbs, or at least if they have some sort of big news that comes out that is positive, not necessarily intrinsic positive value in the company, at least if you're looking at their financial statements, that's not necessarily as big of a factor, but lots of positive movement within a company will absolutely drive up their price. Now, crypto, on the other hand, is more sensitive to things like government rules and tech updates and things outside of its own little circle, because Bitcoin is not a company. Ethereum, arguable. They do development and it is somewhat run. We have videos on Ethereum on the channel if you want to learn more about that. But generally, cryptocurrencies, for the most part, unless it is like a project, specifically Bitcoin, there isn't really a company running it. The only thing that you would look for are tech updates. So those differences can pull them apart sometimes. But here's the key. Investors often treat stocks and crypto the same way. They use similar strategies to decide when to buy or sell. Now, the important thing here is that sometimes crypto does not follow the stock market, and it clearly shows when something important happens inside the digital asset space rather than the broader economy. Correlations drop, and crypto can move on its own terms. Now, for example, look at these values. As we can see right here, in 2024, the S&P 500 increased 24%, while Bitcoin surged 135%. 2023, the S&P rose 26%, while Bitcoin climbed 147%. And then in 2022, S&P 500 declined 19%, while Bitcoin dropped 65%. 5%. Now, as you can see, both of these were an increase with an increase, an increase with an increase, and then there was a decline with a decline. So technically that is a correlation here, but the divergence and the delta or change between these two is drastic. Bitcoin moves much more than the S&P does, as much more as the regular market does. There's a bigger volatility with Bitcoin. Now, as I showed you in this article that was briefly up before, the 90-day correlation with the S&P 500 has reached an all-time high, which suggests that there is a strong connection between both these different asset classes. Now, before this 90 days, during those periods, stocks remained flat and trended sideways while Bitcoin was surging, or, the opposite, correcting sharply. Even as US equity indices barely moved, or basically the indexes like the S&P 500 were not moving very much, Bitcoin climbed. That reaction reflected different demand from investors expecting broader access and institutional backing for Bitcoin as the SEC approved Bitcoin spot ETFs. And ETFs, we've got another video on the channel. Make sure to subscribe, check out the channel for that. With this, the catalyst or the thing that made this happen and this divergence of their correlation happen was based in crypto and regulatory policy and adoption rather than macroeconomic data. Another example happened when Bitcoin rallied in April and May of 2025. The rest of the market was not doing so hot at that time. The equity markets really stayed calm or really declined during the tariff worries after Trump was announcing all of his crazy tariffs. Bitcoin gained more than 15% during that time. Now, there's lots of analysts that are saying that the divergence in this Bitcoin and regular market correlation was basically due to shifting US regulatory signals and rising investor interest in Bitcoin as an alternative asset. Simply what that means is the market wasn't doing so hot and everybody else in the market was saying, oh, Bitcoin is more attractive because the rest of the market is so affected by tariffs. Bitcoin isn't going to be affected by tariffs because it's not a product that's going overseas or, internationally. And because of that, you can see right here, the surge in Bitcoin came even when the stocks were lagging here in the first quarter or just after the first quarter of 2025. Now, outside of this, at times there have been long anticipated Ethereum upgrades that cause similar shifts and similar events where people get really excited about crypto. And these trigger strong price action in things like Ethereum, regardless of what happens to tech stocks and other stocks. These price moves really reflect an interest in the crypto fundamentals rather than how the S&P is performing and how companies within the S&P are performing. Now, on that other side, regulatory headlines, new listings on exchanges, big institutional purchases, or even security instances like exchange hacks can really move crypto independently as well, more so, in a negative way and a positive way for some of those. Stocks may be stable or even rally, but crypto can react to its own internal dynamics. News that matters only to digital asset investors. So if a token faces legal scrutiny or a major protocol fails, crypto markets can collapse pretty heavily even while the broader markets stay positive. This separation is occurring because crypto has its own ecosystem, its own drivers, and basically its own things that are really important to the crypto market. So to sum all this up, crypto does not always follow stocks. When triggers come from inside the crypto world, that's really when the correlation breaks. But I'm sure you're wondering, how am I going to benefit from this? Crypto often moves with stocks due to the shared economic forces, which is important for you to, invest with confidence in those times. But events like ETF approvals or tech upgrades can send Bitcoin and Ethereum and all these other coins up or down on their own. So let's talk about how we can benefit from this. So if there's an event that is likely to impact only the crypto market, like the announcement of the US crypto treasury, the stocks won't react much to this, so you should consider buying crypto. To avoid, fake outs or getting in too late, make sure to check the data in real time and, be up to date with these news announcements and even rumors so that you can prevent missing the market reaction, because oftentimes if there is a news reaction, there's a famous saying in investing in general: buy the rumor, sell the news. So once something is announced, sure, there's going to be a very quick push upward, but the market will kind of correct it or even pull back after these announcements because there are a lot of sources and things where people can get in on this early before the pump up. And that's really what you're looking for, is to, like I said, buy the rumor and sell the news. So use this knowledge to spot opportunities, plan trades, and stay ahead of things. things. If you're ready to kind of ride this wave of this current Bitcoin bull cycle, I put links in the description for Coinbase and crypto.com where you'll get at least $50 in crypto just for signing up with those links. And if you want to get into meme coins, I left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed this video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.